He was the CEO as of the fourth quarter. So these moves that we're looking at in the 13F took place in the fourth quarter of last year. To be totally fair, he's been stepping back. He probably wasn't behind a lot of this anyway, but this is actually the last quarter that you could even attribute these things to him. He remains chairman, so you never know. He'd be looming behind the scenes, but his last quarter as CEO.
And the thing about his investment in Apple was that he famously said he was only investing in things that he understood and that typically did not include technology companies. But Apple, I guess he saw more as a consumer company than anything else.
Yeah, I think so. And I think his thing was moats, right? And probably still is. But the iPhone moat and the infrastructure built in, I think those were appealing things. They have been pairing that investment, as we know. Part of that, and it's kind of a twist because he had said this at the annual meeting a couple of meetings ago, that it was a kind of tax reasons, that they had these huge unrealized gains in there, and that he thought taxes would be going up. Now, they're certainly not going to go up under the current administration kind of anytime soon, but Buffett is always long-term thinking, so I think that's what he was looking at, is we've got, tens of billions of dollars of unrealized gains that will be taxed, and I think it does still hold true that in 10 years from now, probably the corporate tax rate could be higher. And I think that was his concern and part of the reason they were taking down those big gains and those big positions.
The conglomerate also cut its Amazon stake by 75%.
They did.
Wowzer.
So Amazon, they initially got into Amazon in 2019. That was one of his investment deputies, I think, brought it to him then. Again, also like tech, but a retailer, right? Yeah. That position we calculated was up about 130 to 140% over the time they hold it. Nice, but kind of in line with the S&P 500. So it didn't really outperform. So I think it was kind of taking some money off the table. They sold, I believe, like 1.7 billion worth of that stock, cutting most of the position. So that one I think was probably company specific, didn't really outperform. They bought 4 billion of Alphabet last quarter. So, the kind of tech aversion, may be changing over time.
What did he increase stakes in?
So two big ones, Chevron and Chubb. So Chevron is their fifth biggest holding, I think. They, interestingly, I don't know if they were kind of betting on U.S. intervention in Venezuela, which happened kind of after the quarter. So you can't say that like Maduro got taken out and this stuff happened and they did it in reaction. They did it before, but maybe they were reading the tea leaves there. I don't know. It's a big holding for them. I think the kind of geopolitical energy play makes total sense. The other one is Chubb, which I don't want to get too excited thinking about an insurance mega deal here, but they are now they've been the second largest holder of Chubb stock. Chubb makes total sense. It is, in our view at BI, cream of the crop insurance company, global reach, still growing nicely, great management. Like, it's a company that Berkshire would want to own. Now, Berkshire's got their own massive insurance business.
Yes.
The interesting thing is you've got two massive insurance businesses. They're actually quite complementary if one were to want to put them together. So the Berkshire business, very big personal auto and Geico, very big reinsurance, kind of global reinsurance. Those are two businesses that Chubb is not really in. There's some overlap in the kind of U.S. specialty businesses that they're both in, but it would be phenomenally complementary of those two businesses. I think there's probably a lot of hurdles to some sort of total deal there. Chubb's market cap is 130 billion. Berkshire has 300 billion of cash, so they theoretically could buy Chubb in cash if they wanted to. But I think it's probably some cultural issues, and would Chubb really want to sell is the other thing. But it is something as a stock, something Berkshire would want to own.
Is that a strategy that Berkshire actually follows through on, where it starts off with a stake and then eventually decides, you know what, we're just going to buy the whole thing?
Scarlett, yeah, they do that. So I think with Burlington Northern, which is a little bit before in time when they bought it, they did things like that, where they acquire the public stake and then they build it over time. That's why there was a lot of speculation about Occidental. Buffett then came out and threw cold water on it saying that, but it seemed like it was going along with their playbook of huge acquisitions that they made before. So you never
now
know.
that Warren's out, can we have a serious discussion about a dividend?
We can, I think. We'll get you on the phone with Greg Abel and see what he says. But
right.
I think our take has been in the early years, Abel will probably adhere to the ethos of Berkshire, and I don't think he's going to come in and start breaking down walls. I don't think anyone would like to see that, especially Buffett's still there. And they have tremendous excess capital. Buffett has praised Abel as being a great capital allocator, great capital manager. And they've also said we literally can't, there's so much money we can't put it to work in a reasonable way.